Hey guys, how we doing? My intention behind this video is just to really go over the three market trends. There's an uptrend, downtrend, and consolidation, what they mean, and how we as traders can capitalize and make profit through these markets. Each three of these things are different, and they bring different approaches about going about trading and profiting them. And I think it's going to be a really cool introductory video on market trends. And I'm going to make it as simplistic as possible, but also go over a few intricate things that is needed to know to really look for when looking to trade in each of these markets. So there's three. There's an uptrend, a downtrend, and a consolidation. Uptrends, when the market's going up, it's a buyer's market. Simply means there's more buyers than sellers, and it's creating higher highs and higher lows. Higher highs and then higher lows. Downtrend, it's the opposite. It's a seller's market. There's mostly sellers in this market, more so than buyers, thus the price going down. It makes lower highs and lower lows. Uptrend is higher highs, downtrend is lower lows. And then there's a consolidation. It's neutral. It's basically at a certain given time, there's some buyers, then it comes right back down to sellers. It's basically getting stuck in a range. It's a neutral. It's not a trending market. It's not a fluid trending market. It's literally just chop consolidation, stuck in a range. And it's harder to trade this consolidation period. But if you know what you're doing, you could definitely profit off of it. It's an equal amount of buyers and sellers. Thus, the price just kind of chilling around one certain price range. So what I'm going to do first is I'm going to draw what an uptrend and a downtrend is, because I want you to see it through that perspective. And then we're going to apply it to the chart, so you have some type of understanding of what I just drawn and actually putting it and applying it to the real-time charting. So essentially, what an uptrend is, it's the buyer's market. So it's when the market's making higher highs and higher lows. So the market comes up, comes down, creates a higher high, creates a higher low, higher high, higher low, higher high, higher low, higher high. That's an uptrend. Downtrend is when the sellers start coming in control. So now you're going to start seeing the momentum change in the favor of the bears in the market, the sellers, making lower lows and lower highs. So what does this mean, right? What does this mean? It means when we're in an uptrend, means that when we're in an uptrend, we're looking for buys. In a downtrend, we're looking for sells. It's really that simple, right? So logically, if we're in an uptrend, and the market is making higher highs, higher high, previous high, greater than the previous high, and higher lows, right? The market's making higher highs and higher lows. We're in an uptrend. It's a buyer's market. We want to go in the direction of the trend because it's just the least resistance. What makes up the Forex market, it's a bunch of people trading, right? So it's speculative traders like you and I that have a couple $100 accounts, $1,000 accounts. There's the bigger investors and the bigger traders that trade with $1 million accounts. There's hedge funds which trade with multiple millions. There's the actual governments and the banks that dish in millions and billions of dollars. So chances are, if we're in an uptrend here, a big part of the overall movement being so strong in one direction is because these buyers that have the most money is pushing and pumping the price up. So in this case, we're looking at the US dollar Canadian chart. So every time the price is going up, the dollar is gaining strength. And when it goes down, the Canadian dollar is gaining strength. So when there's an uptrend in this market, simply there's just more buyers in the market that are buying the US dollar. So the US dollar, the valuation of the dollar is increasing compared to the valuation of the Canadian dollar. So in an uptrend, in a buyer's market, we're looking to long the market. We want to absolutely take advantage of the momentum we're in and take it up. So logically, right, where's the best area to enter in the market? We want to enter in higher lows. That's the name of the game. So let's write this down. In an uptrend, we want to enter on higher lows. Okay? We want to enter on higher lows just so we get the most risk reward possible, the greatest probability of gaining the most amount of pips, the most amount of money. So the basic idea of an uptrend is when the market is making higher highs and higher lows. That's when you know you're in an uptrend. So the first step is understanding, all right, what market are we in? Are we in an uptrend, a downtrend, or are we in consolidation? The second thing you have to ask yourself is like, all right, if we're in an uptrend, now I'm looking for buy. So now you're programming your mind to look for times and opportunities to get into the market at higher low points for an uptrend. So the market is going up, creates higher highs and higher lows, right? We could consider this right here just a high in this example, right? It's a high. And this is a low. So what creates a higher high is a higher high from the previous high, creates a higher low is a higher low than the previous low. So now the market then starts to get exhausted. The market's been going up this whole time, and now it hit this peak. It hit some type of level that could be a factor that every time it tries to hit it, or often when it hits this type of level, or just because it ran out of steam, now the buyers start losing control. So a lot of the times what happens, and a lot of things signal to this, is when you start seeing buyers or sellers getting exhausted, instead of making these huge pushes, you're going to start seeing things like this. Market just playing around until what? The sellers come in and a break occurs. So now it's hit this higher high point, right? The market was kind of just consolidating in this area between two price ranges, consolidating, right? There was not more any buyers or sellers in this area. And then what happened? The sellers broke, price broke down below, came up. Now it created a high, higher low, and a lower high. It's a lower high. Lower high creates a lower low. Lower high, lower low, lower high, lower low, so on and so forth. So let's look at the symmetry here, right? So in an uptrend, there's higher highs and higher lows. In an uptrend, we want to buy, enter on the higher lows. So in the downtrend, where do we want to enter and buy? Logically, if it's a seller's market, on the lower highs. This is where we want to enter. It's important to know where the market structure is because we need to know what market we're in so we could kind of have a game plan as far as how we're going to enter the market. So I'm going to get into the specifics as far as how to enter and how to know when we're at a lower high or lower low in the next video. I don't want to make this video too long. I just kind of want to go over the basics here. But on a downtrend, conversely, in a downtrend, we want to enter on lower highs. There's one thing worth noting. one thing that's very, very important. When the market is transitioning from an uptrend to a downtrend, something in between both trends happen. So the better we get at determining what happens in between both trends, and the faster we could recognize it, the most amount of money is available to us to make. So the name of the game is to see the transitions, because the transition from an uptrend to a downtrend or a downtrend to an uptrend is where you can make the most amount of profit. So this part here, this orange box, this consolidation area, what happens? The market came up and it found a little floor. This could be a higher low, right? But the market couldn't break past here, right? But it wasn't making any higher highs. So this is the previous level of support here. Right? This green line is holding up price. But finally, what happens? The price breaks this area of support for the first time. Because in this whole uptrend, no support was ever broken. So it was consistently just going up, right? Price never came down and broke the previous level of support. This is a true uptrend. So now when you start seeing this uptrend start slowing down and price finally breaks an area of support, that's when we could start seeing, all right, well, let's see if there's going to be a transition in price. Let's see if we're going to see a lower high happen. And once there's a lower high happen, as long as it doesn't break this previous higher high to increase and further the uptrend, once it breaks and confirms that, then we know we're officially from a buyer's market to a seller's market. So this little area here is very, very important. And we're going to get into this on the candlestick chart. But this is very important, this break of structure. That's what this is called. This is simply called break of structure. And I'm telling you, the faster we're able to determine when break of structures occur, that's when the trading is going to increase like crazy. The understanding of it, the profits, the momentum, everything that you work for in this market, the reason why you're in here, what's your why are you learning this market? Once you start getting good at determining where break of structures are, the game is over. If we could just attune ourselves in our mind to start seeing this everywhere, you can make as much money as you want. So let's go to it. I mean, I'm not going to really explain this part, but I'll just draw from an uptrend to a downtrend, going back up to an uptrend, just so you can see both sides of the coin here. Guess it'll be green for now. Okay. So what happened here? I'm going to draw the same type of lines of support as resistance on the downtrend. So on an uptrend, there's support levels that aren't broken, that just continues to go up. On a downtrend, there's resistance levels that never get broken, conversely. But once a resistance level is broken, like right here, that's when we could start saying, okay, now buyers may be back in the market. So let's wait for a confirmed higher low upon entering the market. So these green bubbles that I'm going to be coloring, these are the first areas that we want to look for with an initial break of structure. If we could confirm that this green bubble occurs, then we could ride the market up and get in at the best time. So let's apply this to a chart now. Okay, so you look at the chart here, right? what has the market been doing? The market has been an uptrend, right? So what is an uptrend? A series of higher highs and higher lows. So let's just draw some higher highs and higher lows. Higher high, higher low, higher high, higher low. Guess you could say a little higher high here, even though it doesn't really dip much, just for purpose. Higher high, and that's it. So you see here the market is trending up. These areas of support are never broken, never broken, never broken until when? Until the market starts changing to the downside. Support. Support. Current level support. And what happens? As soon as the price breaks this level of support for the first time, what happens? The price broke, it retested, and then it dropped. And then as it was dropping, just like right here, once a trend starts dropping, comes back up, you want to wait for the first lower high to be formed. And what happened here? Just that. Support broken. Price made a low, came back up high to make a lower high. Made a low, lower low, lower high, lower low. So in this example here, this is the daily chart. Probably not the best time frame to use for this example, but it works. You get the idea. There was a break of structure, came right back down, create a lower high, and around here you see some type of pattern that signals, hey, this is time. This is a nice pattern right here. This is a bearish engulfing pattern. Boom, take it down. We know we're in a seller's market right now because the initial trend was broken, right? This initial uptrend was broken right here. So now we're looking for sells. So we're looking for points where it's going to go up and do something that's going to signal that the sellers are still in control and then drop in price. So right here would be that. Boom. So super, super introductory. I'm not even going to go much into it more. I'm going to stop it here. This is what I really wanted to go over. This is just basic market structure. You should be able to draw this. Like if you take out a notepad, draw what a higher high is, higher or low. What kind of market is that? Is it an uptrend or downtrend? What's a lower high and lower low look like? Is that an uptrend or downtrend? What happens at break of structure? What happens in between an uptrend and a downtrend? What is that golden zone right here that happens? What specifically happens that transitions an uptrend to a downtrend or a downtrend to an uptrend? Right? What happens at these red bubbles here? I hope you guys enjoyed. More videos to come.